Hello and welcome to Share Talk and welcome to the Mkango live Q&A for January 2025. I'm joined by the president of Mkango, who's the one with the mean and moody lighting in the background, Alex Lemon. How are you today, Alex?
Very well, thanks, Zach. Good to see you again.
And William Dawes, who is the CEO. The running order today will be a presentation by William, who will go through the slides about the company, so we all know what they're talking about. And after that, there'll be some questions, which I will deliver, and then hopefully we'll throw it to the attendees, and they can ask the questions they want to ask. So that will be the run of play today. We'll start off, I think, with William.
Great, thanks, Zach, and hello everyone. It's great to have the opportunity to present about Mkango. So I'm just going to start off with a summary of the assets. So the company was founded by myself and Alex, and really the initial focus is on Malawi, a rare earth project in Malawi, which we've taken from early exploration, all the way through to a feasibility study in 2022, and then environmental approval, mine development agreement signed in 2024. Over the course of that journey, we saw an opportunity in rare earth magnet recycling. We were an early entrant into that sector, and since 2020, when we first invested in HyProMag, we've really sort of put together a suite of assets, and which we're rolling out. We're rolling out a technology, recycling technology, globally. So starting with the recycling, and really this business is underpinned by a technology to liberate rare earth magnets from end-of-life products. Could be hard disk drives, electric motors, etc. And this really gives us a huge competitive advantage in this space. It enables us to liberate those magnets and addresses the challenge of rare earth magnet recycling, which I'll come on to, and that is how to get a magnet out of an end-of-life assembly in a cost-effective, energy-efficient way. So this technology was developed at the University of Birmingham over many years. A lot of R&D expenditure has gone into that from the university and various sort of partners, and around 100 million of R&D expenditure. And we're now at the stage where this technology is being commercialized, and we're targeting first commercial sales Q2, as early as possible in Q2, and that technology can be scaled up over time. So initially 25 to 30 tons a year of recycled neodymium iron boron materials, and we can scale that up. At the same time, later in the year, we're developing the project in Germany. We have a site in Germany, and we are at the process of purchasing equipment and also moving towards production later in the year. In the US, we recently completed a feasibility study of CoTec, funded by CoTec, our partners in the US, another Canadian listed company. And that is a JV, 50-50 JV, being funded by CoTec. We completed this feasibility study for a large-scale plant, which is going to be in Texas. Very good numbers, even at currently depressed rare earth prices. NPV 262 million, strong IRR, and significant upside with a recovery in rare earth prices. So, very good project. Indicates the potential as we scale up the UK and Germany as well. Detailed engineering will be commencing shortly. We also have a complementary technology we're developing in the UK, which is a chemical process, long loop recycling versus short loop recycling for HyProMag. And that is really to develop that capability. Certain types of material will require long loop chemical processing, such as grinding swarf. So really, that really covers the full suite of both short loop and long loop recycling. We're also rolling out the technology. We have a collaboration with a group called Envipro in Japan and the UK. In fact, they're on site last week. they're very interested in the technology, and we're looking at synergies both in Japan and in the UK as well. So a very interesting suite of assets we're building up, scaling up, and rolling out internationally, complementary to what we're doing on the mining and the separation side. So apart from the Songwe Hill Rare Earth project, which I talked about earlier, we have a rare earth separation project in Poland that would take a mixed rare earth carbonate from Malawi and separate the rare earths. What we recently announced was the intention to list those assets on NASDAQ via a SPAC transaction. So effectively what that would do is a partial separation of the assets to facilitate the businesses accessing capital. So we would look to the US, the pool of capital, develop the mining and separation, and then recycling will be funded through Mkango. We recently, we just announced a small fundraising in the UK to keep momentum going on those recycling assets. So that is an overview of the assets. I'm just going to sort of dig deeper into the recycling. So I mentioned earlier that the challenges of rare earth magnet recycling. So if you take a hard disk drive, there's a small magnet embedded in the voice coil motor just in the corner there. Clearly, that's difficult to get out in a cost-effective way, a quick way, and time is money. And if that's shredded, we would lose the you generally lose those magnets. Similarly, we've got here as an example an EV rotor. That's, I think, is from a Prius. To get those embedded magnets out cost effectively is a challenge. And if you shred that, again, you lose the magnet. And the same would apply to a whole range of other applications, such as speaker assemblies. Rare earth magnets are used in a huge range of applications. So that's the challenge. And that is why probably less than 5% of rare earth magnets are recycled from end-of-life assemblies. So HyProMag provides the solution, and then can really unlock the supply chain for recycling. So how do we do that? And this is just an example. So we have a vessel, and the end-of-life scrap assemblies containing the magnets are put into this vessel, loaded into this vessel. Hydrogen is pumped in, and hydrogen reacts with the magnet, and it does two important things. It demagnetizes it, and it forms a powder. And therefore, that enables you to separate that powder, and it's basically a raw material to make another magnet. And how else could you do this? Well, you'd have to dismantle it, you'd have to use heat treatment, and it would be a time-consuming, expensive way. So this is the solution for liberating end-of-life magnets from assemblies. And basically, you end up with a powder, and that powder can go, one of three ways. Now, our preferred route is to remake a magnet, because that's the lowest cost, most energy efficient output. So we take a magnet, powderize it, and then form another magnet. So that is HyProMag's primary product, and we have a number of major competitive advantages in that space and across the recycling industry. Or we can remelt it, or we can even send it to a chemical processor. Most recyclers for rare earth magnet recycling are doing chemical processing. Now, for chemical processing, you need a separated magnet. You're not going to take a whole sort of Prius rotor or a hard disk drive and put it into an acid bath to chemically process it. So the benefit of our technology is, first of all, we can liberate the magnet. If it's embedded in an assembly, we can liberate it. So that solves a major issue for recycling rare earth magnets. And secondly, we can take that powder, we can make another rare earth magnet. And that is a value-added component. It's a lot more value-added than an alloy or a powder, an oxide powder that a chemical processor would produce. So we capture margin, in the front end of the supply chain by being able to access lower cost embedded scrap material. And then we can add far more value as well by making a magnet. And we produce grades, a whole range of grades of magnets. Now, different applications require different grades. So these are the grades that have been made, and these grades cover a wide range of industrial applications. And we're working closely with the University of Birmingham, which developed the technology, center of excellence for making magnets, and really our partner in growing the business. And what can we feed into this process? Well, we can take pretty much anything containing a magnet, whether it's a hard disk drive, a speaker assembly, could be an MRI containing a magnet, could be wind turbine assemblies. So we can take anything, recycle it, and make another magnet. And where are we doing this? Well, in the UK, Tyseley Energy Park in Birmingham, and that has all the ingredients we need to scale this up. So the University of Birmingham is currently commissioning a scaled up plant. So it'll be in this building just here, which is known as Shop R. But this site is ideal for this process. There's green hydrogen on site, so that is used in the process, obviously. And you've also got a biomass plant there, which could supply low carbon power. The commissioning is ongoing. They're currently putting in the infrastructure. I was there last week. Some of the equipment is already there. So this is the pilot hydrogen vessel, which is at the University of Birmingham, which has been running since 2022. And that is being scaled up to 3 times the size. This is currently being tested at MUT in Germany, and we expect that to be shipped in March to this site here. And that is the start of the process. So that vessel, the scrap is loaded into it, hydrogen goes in, and then you produce this powder. The next step is powder processing plant, where that powder is blended, it's sieved, and it's further processed. So this bit of kit here, this is already at site. And then we have 2 commercial magnet making presses, which were commissioned some time ago. So once all this equipment is in, we'll be in a position to utilize that equipment. HyProMag is the main industrial partner for this development, and then we'll be selling product. So similarly, we're doing in Germany, it's a similar scope of development, and we're looking to get that into production, first sales later this year, and then the US will come on stream in 2027. So what are the competitive advantages? Well, I mentioned these earlier. We solve the separation issue for rare earth magnet recycling. We can separate those magnets from end-of-life assemblies. So it's far more energy efficient and cost effective than other forms of recycling, and also the conventional, magnet making. A lot of R&D funding has gone into this. This technology is supported by the Mineral Securities Partnership, which is a State Department-led initiative to strengthen global supply chains. So I was in Brussels recently just presenting this, and we are one of the first projects to be selected by the Mineral Securities Partnership. And so this is a key technology to unlock the supply chain. What's very attractive for our customers is we can make a magnet with a significantly reduced carbon footprint, probably 10% of the energy required. And that capability, that magnet making capability is not well developed outside Asia. So Birmingham University is a center of excellence for making magnets. So we can leverage off that capability, a pipeline of technology. We work very closely with the university. And, you look at other success stories, and you look at how China has built its magnet making industry. Often that's in combination with, academic research and collaboration with universities. So very good relationship there. And these are some of the magnets we've produced. These were rare earth magnets from an automotive application. I should also mention we have a collaboration with a company called Envipro, who are focused on the pre-processing. So when you take a hard disk drive, what Ensurma could do for a hard disk drive is remove the voice call assembly with a very quick automated method to remove that voice call assembly. That creates a more concentrated feed for the hydrogen process. So we don't need to fully dismantle it. We just create a more concentrated feed. And we're doing something similar for loudspeaker assemblies, which we announced recently, and sort of broadening that out to other sources of scrap. So in terms of the development timeline, as I mentioned earlier, production in the UK and Germany this year. There's lots of optionality to scale up that production, both in the UK and in Germany. So we're looking at those options for 2026, and then early 2027, we're looking at first production in the US. And as I mentioned earlier, we have our JV partner CoTec in the US. They're also a shareholder of Magneto, which holds the other recycling businesses. So we're working closely, with CoTec as we go into the detailed engineering. We're looking to appoint the EPCM contractor shortly, and with full steam ahead in the US. So across, all these jurisdictions, we're also looking at Japan, as I mentioned earlier, and other opportunities to roll out the technology. So hopefully that gives a snapshot of what we're doing. So lots going on, and I think I'll stop sharing my screen and happy to move on to questions. Thank you.
All right. Well, I will try and provide the the intellectual ones for you, and we'll see if that goes well. Obviously, there's quite a lot going on with Mkango at the moment, so the questions are sort of quite well sprawled around. But the first question, I think, partly off the back of what you've mentioned, the Nasdaq and the SPAC deal. What's the minimum market value for a SPAC on the Nasdaq? I think Alex has got his volume off.
Thanks, Zach. Yeah, I'm very happy to answer that question. I'm actually currently in New York, progressing our transaction over here, which is going really well. What is the minimum market value on Nasdaq for a SPAC? Well, I'd suggest that our investors look at the Nasdaq initial listing guide for 2025, which is in the public domain. If you look at that, there are actually three tiers on Nasdaq. There's the global select market, the global market, and the capital market. And for example, the lowest tier is the capital market. And the market value of listed securities on the capital market must be at least $50 million. And the other tiers are higher than that. So that's really what I can say at this point in the markets as far as that question is concerned.
Right. I suppose I just looked at your market cap a bit earlier. It's around £28 million. So I suppose that's not far off. Well, I suppose it's about $40 million, but maybe that's a red herring in terms of what we're talking about here. What's the reason for doing a SPAC deal in the first place? Okay,
thanks for that. So the intended listing on the Nasdaq, if we were to go ahead with it, would enable us to gain better access to the US funding, and also it potentially facilitates pools of capital for different parts of the business, as Will mentioned earlier. So it's a really potentially exciting transaction. It's one that we're progressing well, and looking forward to putting out news in the coming months.
A sort of sub question: is it a reflection of the state of the London stock market, or is just the US a better place to be?
I think at the moment for us, being in the critical minerals space, the US market is very good for financing and funding these types of projects, not only in the actual in the financial markets, but also with regards to direct financing from US government, from various state departments. And we've seen various examples of that in the last few months. So really, it is to some extent what's been going on in the UK markets, Australian markets. But for us, the US markets are very buoyant. It's a very exciting time. You'll have seen today there's the inauguration of President Trump, a lot of reorganization in the State Departments. And we're very much looking forward to seeing how this transaction develops.
Right, the next question, why does the SPAC focus on the separation plant in Poland? Should the plant not be in the USA to increase appeal to US investors and mitigate potential tariffs?
That's a great question. I think we've discussed this previously, but our selected site for the separation plant in Poland has highly competitive operating and capex costs. When we were looking at different sites around, whether it was the UK, Europe, Middle East, rest of the world, operating costs worked out around 40% cheaper in Poland. It is, as you know, in the EU and close to all the European OEMs, all the manufacturers of whether it's electric vehicles, electric motors, hard drives, etc. And it's supported also, it's a supported supply chain into North America from Europe. There's incredibly strong Atlantic Council support for Poland and a lot of US government support for Poland. So strategically, Poland is a very important country for the US. As you may be all aware, the EU have invested directly into Mkango through the EIT Technology Fund. And an initial €200,000 investment has now been put to use and is being used to carry out value engineering and optimization at ANSTO in Australia on the Songwe processing flow sheet. We're sure that this will help fast track the future rare earth carbonate supply into the future Palave separation plant. And, in the future, clearly, we'll also be looking at downstream projects as well as offtake and also other developments in the US.
Providing you can tell us, which you may or may not be able to do, what is the next major milestone for the transaction?
Well, I think that was in our previous RNS. Following the announcement of signing a non-binding letter of intent with Crown PropTech Acquisitions on January the 8th of this year, the next potential major milestone for the transaction is to sign a binding business combination agreement. As I mentioned, I'm over here in the US, in New York, and hopefully traveling up to Washington later in the week. We're working full steam ahead on this transaction. Our US legal counsel are very busy at the moment. US auditors and other advisors, they're all appointed. I've got our chairman, Derek Linfield, arriving this evening, and we've got a full week of meetings ahead of us. So very exciting times for Mkango.
All right, we're going on to the recycling part of the questions. And you'll have to help me because I don't know what the acronyms means. But what is the strength and life of the magnets produced compared to primary NdFeB magnets? How do they compare to other companies producing recycled magnets?
Great, thanks, Zach. So, I think we're certainly achieving commercial grades, and in fact, one of the slides I showed previously, we're producing industrial grades across a range of applications. So yes, we are matching grades produced in primary production, and really by primary production, this is from conventional mine to through to magnet. So yes, it's very positive. We're seeing a lot of interest in the products, and they've been testing it, across a range of applications. And just bearing in mind that we've been working in various projects for a number of years with major OEMs, And I would say that we're probably working with the majority and getting interest from the majority of companies in the automotive space. And that's not only in terms of interest in magnets, but also providing recycling solutions. Because, you know, in the longer term, we're going to see these EV rotors coming back into the market, and there needs to be a recycling solution for that. So we can provide that solution. In terms of the types of magnets, you know, we can, you know, produce. In fact, a recent example was ZF testing a recycled magnet in a rotor, and you know, it was pretty close to what you'd get from a primary source magnet. So we are demonstrating that, and we're expanding the range and of products, you know, on an ongoing basis, and engaging with, and it's not, you know, not just the automotive, across all industries, a huge amount of interest. So if you know, if we can provide a recycling solution, a competitively produced magnet, a magnet with a very low carbon footprint, and a domestically produced magnet, that ticks all the boxes for what an end user is looking for. So we're very, very well positioned in that sector, and working with multiple parties on that.
Is the magnet quality sufficient to generate sales and offtakes, which I suppose you're partly answering at the moment?
Yeah, no, absolutely. Yes, and you know, I don't think we'd have any problem selling the product. And you know, there's a range of products we can produce, all the way from a finished sintered magnet, or a block that could go to other sort of shapers and manufacturers of the magnets, or we can produce a powder which can go into, you know, alloy making, or even into chemical processing. So in actual fact, when you look across the recycling space, you have most participants and new entrants into that sector is in the recycling via chemical processes. And that, you know, that's a competitive market. You know, obviously China is a big sort of chemical processor. Where we're positioned is, you know, earlier in the supply chain. So we're doing the liberation step. So all those chemical processors are potential customers. However, we'd rather go further downstream and make a value-added magnet. So we've got all that sort of optionality to produce different products. And also, you know, as I mentioned earlier, if it's got a very low carbon footprint, it obviously ticks the box in terms of domestic production, because, you know, because of the nature and the economics of the process, it means we can start off at a relatively, you know, sort of modest scale. So we don't need to go in with a very big plant initially with those economies of scale. We can start off at a fairly modest scale and then scale the business, and that means we can develop in partnership projects in the US, in the UK, Germany, other jurisdictions, and scale up as you know, demand increases and as the scrap supply increases. So having the ability to produce domestically in different jurisdictions with a sort of scalable technology, very low carbon footprint, and we can compete with other magnet makers because we can access material at a lower cost through this recovery of recycled material using this technology. So yes, we can produce the magnet quality sufficient for sales. And as I said earlier, if we were producing product today, we're getting strong interest in that product.
Is there an aspect of having first mover advantage here? Does that give you an edge over the competition?
Yes, I think so. I mean, we first got involved in recycling. We originally, in conjunction with the Songwei project, we had a strategic investor, Noble, and in particular Talaxis, who invested in the project in Malawi to advance that project through the feasibility stage. And at the same time, we set up Magneto, which is the entity that holds the recycling businesses, to start looking at downstream technologies. Through various sort of connections, we started looking at the recycling technology being developed at the University of Birmingham, and saw it as a very interesting technology. Great team at the University of Birmingham, and this technology looked very interesting. We could see the opportunity. It was complementary to what we're doing on the mining side of things, but this was back in 2020 when we first invested, which I'd say is probably far earlier than other participants in the sector saw the opportunity there. So yes, we do have an early mover advantage, and that means we can get involved earlier in the supply chain and access this material at lower cost with this technology. So I think we are ahead of the competitors in that we'll be in production very soon, and we'll be selling product, and it's going to be commercial sales, and we can scale up across jurisdictions. And as I mentioned earlier, most of the competition in this space is in the long loop chemical processing, which requires much bigger economies of scale. Initially, it also requires a separated feed. We can process both separated feed and a supplemented feed, and we can go to a higher value-added product. And the technology is called hydrogen processing and magnet scrap that's being commercialized by HyProMag. It sort of facilitates this short loop recycling. So the powder that you generate from the process is a very sort of pure powder that facilitates directly remaking a magnet, which is value-added product.
Going on to the UK, that's at an initial stage there. Why is that so strategically important?
So with the UK, I mean, really what this project is doing is bringing back magnet manufacturing to the UK. And the reason we can do that competitively is the ability to access lower cost feedstock via utilizing this sort of technology. So clearly, any development, it's got to be competitive, it's got to be economic, and we can do that utilizing this technology. And I think for the UK, this really builds on UK competitive advantages, and in particular, centered around the University of Birmingham, Centre of Excellence for Magnetic Materials. We can access a broad variety of scrap. We're in Birmingham, close to centre of the UK, very well positioned for accessing feed. There's some major recycling companies in the region which facilitates that access to material. And we believe this is the beginning of something very big. We're starting off fairly modest scale with this with the development at Tyseley Energy Park, but we're already looking at something much bigger on or near the site to scale up very significantly. And really what we feel that'll do is catalyze other industries. So if you can deliver high quality material, give comfort that you have a sustainable source, the sustainable domestic source, we believe that'll catalyze other industries, working closely with the University of Birmingham. So you have a pipeline of technology and expertise. So this is really something the UK should be focused on and supporting, because there's huge potential to scale up this technology. So we are engaged with UK government on an ongoing basis, and I think there's an exciting future ahead for this business in the UK.
In terms of the feedstocks, what are the main ones you're targeting, and why? There's a variety of EVs, wind, etc.
Yeah, so at the moment, most end of life material that's containing magnets that's ready available, it's there's a lot of material available in electronic waste, and often the magnets in this material are fairly small. So and that really for us, that's it's a great feed for us, because it means we can liberate that material, and we can do it efficiently, and we're developing pre-processing methods to liberate it, which means that we can process diverse ranges of feed. Hard disk drives are readily available. So that was really where the technology, the focus of the technology initially. So that is one of the key feedstocks. And then also loudspeaker assemblies. We just announced a transaction recently, a collaboration with Arera. So, for example, you take a flat screen TV that's going to have a magnet associated with it. So Arera are recycling the flat screen TV, but in the past, basically that speaker and that magnet would be lost. It would, you wouldn't be able to recover it. So what we've developed and what we're developing within Surma is some of these magnets with the flat screen TV. Some of them are neodymium iron boron, which are the higher value magnets of greatest interest for us. Some are these sort of lower value sort of ferrite magnets. So first of all, we have an automated system to identify and sense these magnets. It's a magnetic sensor and an AI vision. So that rejects these ferrite magnets. So we can process this neodymium iron boron magnets, and then they go into the HPMS reactor, and then we can recover the embedded magnets. So speaker assemblies, MRIs, we can process wind turbine magnets, EV rotors, pretty much anything with a magnet in it. So yeah, it's a broad range of material.
All right, you have competitors focused on long loop recycling via a chemical process. What are your competitive advantages for your short loop process?
Okay, so really, it's the ability to liberate the magnets. So really, the added value and the competitive advantages around the ability to liberate the magnets. So we can recover those magnets to provide, to generate this powder. And then the second major advantage is we can go all the way to producing a magnet. So we're purchasing material at a low cost, because it's embedded in electronic waste or other material. So we got a cheap raw material, but then we can turn it, because of the hydrogen, the HPMS process really sort of preserves the structure and the purity of the underlying alloy. We can then manufacture that into a value-added magnet. So that's really the major competitive advantage. The reason less than 5% of rare earth magnets are recycled are because it's that separation issue. So how do you liberate the magnet? And we provide the solution. So in terms of the long loop process, the chemical process, there's still a place for that. I mean, there's certain types of material that would need to go through a long loop process. For example, when you make a magnet, you generate this sort of grinding swarf that's not suitable for short loop processing. In fact, we'll actually be producing swarf from our process. So when we make magnets, we'll produce a grinding swarf, and we would send that to a chemical processor. However, it's a byproduct for us. Our main focus is on producing this higher value-added product. So that's the main competitive advantage: ability to liberate magnets from, and therefore access a low-cost raw material, and the ability to produce a value-added product. So yeah, that's what it is.
Okay, and in terms of I suppose the most important factors for purchasers of your end products, is the sizzle there, the price sensitivity, or is it the low carbon footprint? What do you think they're looking for?
Well, we're engaging, with multiple groups, and it's really it's a number of areas. It's whilst the price is obviously important, what we're finding is the ability to produce a magnet domestically, whether we're in the UK, Germany, or the US, is and produce it competitively as well. That's very attractive. It's diversifying source of supply. But also the fact that it has a carbon footprint that's a fraction of a carbon footprint from a magnet that has been produced, all the way. If you think of the number of steps to produce a magnet conventionally, it's the mining, separation, metal making, alloy making, strip casting, and then you go into magnet making. So the carbon footprint's about 10% of that process. And clearly, if you're an end user looking to lower your carbon footprint, this is an easy win. So often what we find is that we're not only engaging with the procurement teams, we're also engaging with the sustainability teams with the sort of potential purchase of these magnets. And the fact that not only can we can sell a magnet, but we can also provide a solution to recycle those magnets at end of life. That's a highly attractive proposition. So I think as you go further downstream, and more specialist, it becomes less price sensitive. So it really depends on the customer and the application and the grade, etc. But we are finding a very sort of strong niche within the industry, and complementary to other magnet makers outside Asia.
It's almost like it's like a bespoke service in a way, right?
Yeah. No, exactly. And so we can, the way the process works, it's a batch process. It'll become more automated as we scale up, but it's a batch process, so we can provide bespoke solutions to buyers of these magnets, different grades, and even with in the EU with the Critical Raw Materials Act, requiring 25% recycled, you could have a scenario where you 75% of the magnet comes from a mining operation, and 25% comes from a recycled feed. So we can deliver that recycled feed. You still lower your carbon footprint very significantly. And looking ahead, we've got primary operations, Malawi and Poland. We've got recycling operations, so we could deliver a sort of product solution, ranging from 100% recycled all the way to 100% sort of primary source magnet. So it's that sort of flexibility that we're sort of putting together at the moment.
Just a couple of questions here. What's the strategy within Surma?
So in Surma, it's a really interesting opportunity. This company is based in Spain, sort of fairly near to Barcelona. The university has been working with them for some time, and we're now moving onto sort of commercial production side. So we formalised the agreement. Fantastic team there, and some really clever solutions for pre-processing. And really, what this is, there's a big focus, in the industry. Well, there's one solution for recycling hard disk drives, for example, is by dismantling, and clearly that's takes a long time, very difficult to get the magnet out, and time is money. So if it takes too long to dismantle and try to recover the components, it's not going to work. It doesn't make economic sense. What Surma are doing is developing the sort of pre-processing techniques to a whole range of applications. If you take but just focusing on the hard disk drive, if you look at the sort of value components in that, and what the requirements are for recycling. You know, the PCB, printed circuit board, is a high value component. You know, you've got the rare earth magnet in there, which is you know, it's a critical material. So you want to recover the magnet, you want to try and recover the PCB, there's sort of value in there, and you want to destroy the data. So we've already solved. We can very quickly remove the magnet. You know, a couple of seconds, we can remove that corner of the hard disk drive, the voice call assembly, which is a direct feed for the hydrogen process. So that's solved. The next thing we're working on an ongoing basis is automated removal of the circuit board. So that removes another sort of high value component of the hard disk drive, and then the rest can go for data destruction. So we're developing the model. The sort of first prototype was well, in fact, it was developed, you know, some time ago as one of the research projects. That was the University of Birmingham. It's in a container. The next prototype, which is in Germany, it's the size of a sort of pallet, and then the next one's going to be delivered to the UK shortly, and that will speed up the process, providing a automated sort of feed for the hydrogen process. We're doing the same thing for speakers, and we're looking for other applications as well. So it really just enables, you know, lowers the cost, enables quick pre-processing, and you know, increases our competitive advantage. So that is one of the competitive advantages, the relationship with Envipro.
Right, and just finally on the formal questions, recycling network is complex, sophisticated, and I presume quite fragmented. Can Mkango build an effective supply chain for scrap?
No, absolutely, and we're already working with a number of parties in various projects. For example, EMR is the biggest automotive recycler in the UK. Arera, we announced recently for recycling display equipment. ILS, long-standing relationship, focused on hard disk drives. So we're building those relationships on different levels, not only working with, you know, for example, those recycling companies, but also engaging with, you know, for example, car manufacturers who need a recycling solution for the rotors, for magnets embedded in the rotors, and working with them on design for recycling. So when that material starts coming on stream, and we see more and more end-of-life electric vehicles, HyProMag will have that solution. Similarly for wind, you know, wind power, we're working with EMR on a project on efficient dismantling of wind turbines. Obviously, these are huge bits of equipment, and there's a lot of magnets in them, but it's got to be done safely and quickly and economically. So we're working with EMR on that, with HyProMag providing the sort of circular solution for the magnets. We're also engaging with OEMs, major data center providers, hyperscalers, i.e. going direct to sources. So it really depends on the type of end-of-life material, and I think, you know, what we're looking to do is position ourselves, you know, in various partnerships, various direct relationships, and so we've got that flexibility to do that. And I think our competitive advantage means that, you know, recycling companies want to work with us because we can provide the solutions which enables, you know, capturing more value, more efficient recycling, you know, enabling solutions so we can recover, you know, the magnets that would otherwise go to landfill, and that also helps the ESG and credentials of that recycling company.
Okay, right. Well, I was actually not looking at the Q&A questions that have come in from the viewers. which is probably just as well, because there's quite a lot of dynamic comments in there. Obviously, the elephant in the room is that you've just raised money, and one of the points there, I'm sort of trying to sort of bring most of these points together, but it's just like you raise money again. I think how much runway does that give you? Is there any prospect, or when is the prospect of that sort of cycle of placings going to end? And also, I think maybe slightly cynical is sort of tend to speak to the market after you've raised money rather than in between time. So just a general thing about your communications and dilution, really, I suppose, is what the punters are asking at the moment.
Yeah, no, sure. And look, I think we need to keep momentum going on these assets and get keep momentum going on the developments, bearing in mind that we're developing a project that is going to be in production later this year in Germany, and and that is with the support of grant funding. And similarly in the UK, whilst that project has been funded by the University of Birmingham, we are the major commercial partner, and so there is a requirement to build working capital and keep momentum going. So we have a supportive shareholders who've supported the company. It's a fairly modest capital raise, but it enables us to get through to production. I think
This will get you to production. This 2.3
we will be in production. I mean, the UK will be in production in Q2. As early as possible in Q2, we will be in production. So we are targeting to make sales in Q2. So yes, and then the other milestone we have is we'll obviously be signing the binding agreement in relation to the SPAC. That's another milestone that we're targeting. And then later in the year, we have the development in Germany. So really what the main use of proceeds is to continue momentum going on that project in Germany. So for example, we are buying and ordering equipment. We're putting in infrastructure into the site in Germany. I'm flying out there tomorrow together with CoTec. We're going to be running through, checking progress and seeing how the development's going. But we got a site; it is happening. And so when you're developing a project, there is a funding requirement, and we need to keep momentum going on these projects. We're a fairly small team, but we're a growing team, and I think we're very well positioned with the production coming on stream in the UK.
Would you potentially get, because obviously this is a sort of green type of it's a green magnet, I suppose, literally. This is sort of the sort of thing that would attract government grants from all over the place, especially the EU, I suppose. Would that be more likely to come once you're producing, or would that come sort of in the run-up to you producing, so that maybe there wouldn't have to be another raise if there was a time slip or something like that?
Yeah, so the HyProMag has benefited from a lot of support from grant funding. We're in a whole range of projects at the moment. But I think, as you can imagine, being able to produce something and sell something is a step change in the development of the company. So I think that will hugely broaden the opportunities there, including access to grant funding as well. So yeah, I'd agree with you. This is a milestone we've been working towards for quite some time, and the benefit of working with the University of Birmingham is that development is being funded via Driving the Electric Revolution. So it's funded by by that entity, by UK government money in any case. What HyProMag is doing is there's various aspects of the development that we'll be funding, including the working capital for purchasing of raw materials. And we will utilize the equipment, the capacity, obviously, to produce that product. But it's a massive step change, obviously, to be able to get something into production, start selling product, and that massively broadens the scope of the opportunity. And that's certainly based on the discussions we've been having, since acquiring, the interest in HyProMag and then acquiring HyProMag. This is the milestone we've been working towards. It's a step change in the company's development.
And would the NASDAQ, the SPAC NASDAQ situation, would that be a funding opportunity? Would that be a time, say it happened in July, would there be 5-10 million coming your way from that? Or is that nothing to do with the Mkango UK situation?
Yeah, that's really that's really a separate process, and one of the reasons for doing that is to, because some of the feedback we've been getting, and hence looking, we started a strategic review some time ago, and we have sort of feedback from a whole range of strategic investors, larger investors, and what we're finding is that we had certain sort of groups who were very interested in the recycling, and we have certain groups that are very interested in the mining, and then some, across two businesses. Because whilst they are very complementary and there are synergies, in reality we've got to grow the business and we need to access capital for both businesses. And so this opportunity via the SPAC by the sort of partial separation, we see as an opportunity to do that. So we can access larger pools of capital for the mining and separation via a US listing, whilst for the UK recycling, because of the substantial support, and I would say for the mining and the separation, we are also engaging with sources of grant funding for those businesses as well in the US. But I'd say for the recycling business, given the scale of Mkango at the moment, the capital required for the recycling business is a lot lower. So that's why partial separation, where you have Malawi and Poland with much higher capital requirements, we access the US markets, deeper pool of capital, and so we have that partial separation. For the recycling, we're very lucky to have supportive shareholders. We are looking to obviously broaden the shareholder base, access strategic, and capitalize on that strategic interest. But getting into production, being able to sell product, I think is really the catalyst for doing that. And in the meantime, we need to sustain and keep momentum going on these developments.
Okay, just very quickly, because we with a lot of exciting questions. I wish we'd started with the people's questions rather than the investors' questions. Just one point that somebody's made, which seems to be a decent one. You've got sort of US SPACs which have rare earth projects trading on very high multiples, and isn't Songway a much better project than most, and probably could attract a higher, or equally high, or higher relative multiple.
Alex, do you want to take that one?
Yeah, I'll take that final question. That's a very good point, and certainly you can look at historical examples where rare earth projects have gone through a SPAC merger. This is a very exciting time for us. I would say watch this space. I've already discussed with the investors on this call today the actual SPAC requirements, and it's for a requirements for a SPAC merger and those minimum requirements. As far as as far as the process is concerned, we've already mentioned that we're going with the next step is to announce a binding binding agreement, and it's at that time when a valuation would be announced. So unfortunately, there's not more I can say on that matter, but yeah, feel free to look at past examples. The Songwe project's a fantastic rare earth project. We're taking it all the way through. We've got a definitive feasibility study. We've just, last year signed the mining development agreement. It's already got an ESHA. If you look at the status of that project compared to other rare earth projects, it really is at a different scale, and it's an amazing project in a fantastic jurisdiction with very close links to US and European markets. So yeah, watch this space.
Okay, gents. Well, I suppose we've done an hour. I would like to archive the questions that have come in. I'm sure you'd like to see some of them, and for your records, even if you don't answer them. So maybe we could have a normal interview at a date in a few days after we've digested that. But in the meantime, Alex Lemon and William Dawes from Mkango, thank you very much indeed, and apologies for not answering all the questions that came in. But I suppose one or two of them, one has to probably run by the gents here before they answer. So there we are. Thank you very much indeed, and hopefully see you again soon.
Thanks, Zach. Thanks, everyone.
Thank you.